Have you guys heard of a REITs, a real estate investment trust? Stay away from it, guys. These REITs are made to implode. And I'm gonna take a moment to explain to you why you wanna stay away from it and where they'll hook you and take your money and you don't even know that your money's going into a REIT. So listen up. A real estate investment trust, it's kind of like you're buying a stock, okay guys? So you go to the bank, they have you sign this big old fat little contract and you give them 25 or 30 grand, right? And they're gonna promise you a dividends. They're gonna promise you 5-6% on your money. And everyone's normally really happy that they're investing in real estate because that's how they present it to you. It's an investment in real estate. So I'm gonna tell you about my uncle Angel Juarbe, who is the hardest worker that I've ever known. And when he retired in the early 2000s, he decided to put $25,000 in a real estate investment trust, in a REITs. And he didn't understand what he was doing, but he was excited. He was so proud that he had put his money into a real estate company. So this real estate investment trust invested all the money into commercial office buildings and into retail strip centers. And we all know what happened in the last 20 years to office buildings and some strip centers. And his 25,000 bucks got devalued to $6,000. But that's not at all the point because it's a terrible loss, right? You could see that it's a terrible loss. But the worst part of his huge loss was him being able to get his $6,000 back. It took me about 6 hours of my time and I had to notarize, I can't tell you how many documents. It was impossible for my uncle at 75 years old to have the capacity and the knowledge to be able to figure out all the paperwork he had to fill out and all the notaries that he had to sign. It was terrible, guys. It took me 6 to 7 hours to get this done. So this is what they do. So I'm gonna give you an example. So they get all these victims. I call them victims, sorry, but I call them victims, okay? They get all these people to invest. You got different banks selling different REITs, right? Or selling one REIT, but they're collecting money for one REITs from like 50 or 20 different banks. And they get this pile of money together. So now they have $1.5 billion or $2 billion to go out and invest into commercial real estate. And that's exactly what they do, guys. They go out, they got these young kids that have no experience. They don't know an asset class, how it works. They don't understand the different variables. They don't understand what customer service is. They don't understand what maintenance is. They don't understand what operating is. They don't understand how insurance can go up. They don't understand how to appeal property taxes. They don't understand how to talk to a natural human being. They don't understand how to work with a tenant. They don't understand the basic fundamentals. And you have to know these things in order to operate an asset that's worth hundreds of millions of dollars. So these young kids come in and they buy these assets and they feel good because they make a fee, right? Now, what happens with that asset? Well, the asset is purchased, right? And it doesn't matter if the asset goes up or down. Because at the end of the day, the person that's taking the hit is the 100 or 200 or 300 investors that put their $25,000 in or $1 million in or whatever they invested into this REITs. They're the ones taking the loss. And when they look at these reports and they read them and they see that they've dropped drastically, all they do is they sell off their stock and they get the remainder of the money, kind of like my Uncle Angel did. Of his 25,000 bucks, he got $6,000 back. That's a huge loss, guys. This is what's going on. You can't afford to invest your money in a REIT. And these REITs, at the end of the day, they're the owners. They're gonna keep the asset. You're not the owner, they're the owners. You're buying a stock in their company. So you're not buying real estate, you're buying a stock. They're buying the real estate, they own the real estate. So you have to keep that in mind. When a REIT increases their footprint in a state, it's not good, guys, because what it does is it increases these values to false numbers that really don't exist. Okay, so along with increasing the values in these markets, right, what also increases? Your rent. Your rent is going to increase because the more they pay per square foot, the more your rent is going to be per square foot. Keep in mind, guys, that both of these square footage numbers have to match. One has to support the other. So these REITs, when they come in and they invest in your market. I'm never happy because I feel like these are incompetent operators that really don't understand the market. And that's what's happened to our real estate market in the last 6 years. 60% of commercial has traded. And the reason that it has traded, meaning sold, is because your original owners that owned and operated these commercial properties, they were solid. They understood exactly what their operation costs were and what their profits were. And they knew that the margins were really small. But when these REITs came in the last 6 years and paid them top dollars, that story alone tells you 60% of commercial sold in the last 6 years. That itself tells you the story. That doesn't happen just to happen. That happens because true operators realize that they're gonna get paid a ridiculous amount of money that makes no sense. And these inexperienced operators are gonna come in and inflate values. So when you ask me, how do I feel about a REITs? I'm never happy about them. I'm more comfortable with a guy like Ben Mala, who's worth a little over $500 million, who's an individual, and he goes out and he looks at these asset classes and he studies the numbers on these asset classes, and then he determines if he wants to invest his money in that asset class. Those are the guys that I respect. And they're out there, but not many, because these REITs are coming in and they're scooping up a huge part of the market. And they're not just happy with buying commercial property. As you can see, Invitation Homes just bought 80,000 single families and now they're liquidating them at a loss. Blackstone bought 28,000 single families and now they're liquidating them at a loss. This is what's going on, guys. They're not happy enough with inflating these commercial markets. They also want to target the little people. You, in 2021 and 2022, when there was open house and the line was out the door and there was 10 offers on the first day, you know how many offers of those were from REITs? It'll blow your mind if you do your research on how much they were investing into single family homes. And now companies that bought these REITs, that bought these single family homes, are selling at a loss. And what is that gonna do for you? Real simple. Your home is located right here. And 2 blocks away, you have 3 homes that just sold that were REITs owned at a loss. That's your new comparable. So if they sold at a loss, it just devalued your property. So there's a ton of things that I really don't care about real estate investment trusts and even private equity firms that are coming in not having their mind in place. Have you watched this video and has it made sense to you? And you have a property that you bought between the years of 2009 and 2018, and you have equity in your property. But it's unfortunate that you missed the peak of the market, and you know you missed the peak of the market, so you don't want to sell because you feel that we're going to get back to that peak. After you listen to this video, I think it's going to be very apparent that we missed the peak and that that peak was really false. So you can go ahead and contact me at Jose Juarbe, last name is JUARBE.com, and I'll get back to you as soon as possible. If you like my video, smash the like and share.